Okay, good day traders from livewithoscar.com. I want to get right into this video. This is video number 1373. It's being recorded midday on Wednesday, September 16th, 2015. Please remember that futures trading is extremely risky, causes substantial financial loss, is not suitable for all traders. You certainly shouldn't play this game unless you've got risk capital to use. And above all, never ever trade this market without using stops. Very important. Always place stops when trading. All right, so let's get moving. Traders, OMNI got stopped out in the S&P, NASDAQ, you name it, whichever one you chose, trying to go short inside of a bear flag yesterday, and stopped out trying to go short inside of a bear flag in gold today. Rare occasions, I get it, but sometimes flags don't always work. Let's see what that's about. We are looking at the NASDAQ daily bar right now. Look at the size of this bear flag, and where is it? Right below the 200 bar moving average. I mean, it's sticking its head up through it just a little, but I don't know. That's as scary as the day is long with a Fed meeting taking place today and tomorrow. Today is day one of a two-day Fed meeting. Why do we have a bear flag below the 200 bar moving average? I mean, as an analyst, that scares me. Now, you look on a weekly chart, which we'll get to, and the weekly says, hold on, maybe, just maybe, we will sustain or we'll be okay. But when you look at the dailies, I mean, big bear flag here. And under the 200 bar moving average, the whole street looks at it. This is the NASDAQ, one of our leaders, right? So we've got to be careful what we're seeing here. The blessing for us is tomorrow is the Fed Day announcement, and we don't have to do anything. Thank the Lord, I don't have to make sense out of this for 24 hours. So, but we need to keep our eye on it. If this flag is going to prove to be correct, we've got a massive downside projection. So let's hope somehow Aunt Janet comes out and says, blah, 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 and we go all the way up here. We've got to hope for that, but hope is not a trade. This flag, if you ask me, is a trade. Being below the 200 bar moving average right now is a trade. It is scary, but let's see. We do have the Fed acting on Thursday. Tomorrow, the Fed should be acting, giving us whatever announcement they want to give. No one expects rates to be raised unless you're slightly crazy here, but you never know. We'll see. So let's move along. Let's look at the emini S&P. What does that look like right now? No different, except for the 200 bar moving average is miles above it. It's broken it a long time ago. And we are still just flirting with the top end of a big bear flag. You know, technically, this is not anything to write home to mom about if you've got a long stock portfolio. Now, I believe in the bull market in the S&P overall because when we go to a weekly, you'll see that we've been in a bull market for a long time, but we're day traders, and that, my friends, is not telling you to be long. It's telling us that the downside may come after the meeting. Slightly disturbing, but let's see. Let's move to the Dow. As we move to the Dow, if you remember in the weekly videos, this was the date we came out with flat tops produce market drops on our weekly. This was my sell video. Day one after the sell video was this, day two was that, day three was this, and they just started to fall apart. So the flat top did produce a market drop. We got under the 200 bar moving average on your Dow, and it tumbled. But now we've got the big bear flag. Look what the Dow did. Today it got a little bit over the flag if you draw it that way, but simply take the line and do this across these tops. Remove this line, and it's not so impressive yet. Let's see. Let's wait and see. You know, we've got the Fed speaking. I will say this. Usually the Fed has enough power to get a nice fat rally out of the market, even if it's a 1 or 2 day rally. So let's see. We didn't trade S&P today. We don't plan on trading it unless we do a quick scalp today, and certainly we will not be trading it tomorrow on Fed Day. But let's move along. There's more to look at. Let's go out to a weekly now. If you take this very same chart and look at a weekly, traders, listen, we've been in a bull market for a long time. Long time now. We came down out of the bull market for the first time, and if you look at this, you don't usually crack this channel. This channel has held just about every single time you went near it, right? Here, here, anytime you went near the channel, the market held. Well, this time, big circle to illustrate, we break through the channel, come down and bounce off the 200 bar moving average, where obviously fund managers must have been waiting, right? Because they love this 200 bar. Since then, we've just put in a bear flag on the weekly, just like it has on the daily. So for now, I mean, that is bearish. We did fall out of the channel. The Fed does have the power to make this go up for a few days, so let's see what the Fed says. But we need to recover a little bit here to start getting happily bullish this market. I'm sure we can, but we're going to need to recover just a little bit. Then we look at gold. Gold on the weekly. You know, if you look at this, let's remove this monstrous line that's kept gold in check for quite some time, the red one. Let's just move it out of the way for a moment. On top of the big red resistance, you just fell out of an apex. You have to be someone chasing the gold, the short side of gold. You fell out of the apex, it runs back up, tests the bottom line, and starts to head back down. And if you haven't been selling gold just about every day since, you're not paying attention. Then we can take it to the daily. But if you'll notice, before we go to the daily, the entire daily bear flag sits inside of this black bar. I basically thought if we get anywhere near the top of all of this, we need to be out of the trade, so I let us get stopped out today. That doesn't mean the trade won't turn around at some point and work. And why would I think that? Watch what happens when you go to a daily in gold. When we look at a daily in gold, I'm simply going after the same stuff I've been going after over and over again, and let me assure you it has been working. A one-day blow-through in a flag is customary for some reason in gold. Just about customary. A one-day blow-through, and then we end up dumping. A one-day blow-through, and then we end up dumping. Here we have a shoulder, a head, and a shoulder. I'm looking at a head and shoulders pattern. So if you think I was crazy for being short the gold today, and every day that we've scored being short gold, finally we had the blow through, just let me continue to illustrate exactly what I'm chasing down. It's the same pattern over and over and over again that we've been making money with since the 1690 top we called. Look, this is nothing more than this. It's the same pattern. And then, want to see magic happen? It's the same pattern right here. I'm just chasing down repetitive patterns in gold. They have been producing winning trades for us constantly. Not every trade's going to win. Today didn't win. Anyone that's going to be a baby about it, I mean, you can't force the market to not repeat. But here's a pattern, a repeating pattern, a repeating pattern. If you look back, I could do it again for you here. You want to see the same pattern here? It's just bigger. This is no joke. Gold has been going down for a while, and it's been almost an easy call on the downside. Not every trade will be easy. Once again, it forms a flag, and then it dumps. Here's your flag. The next thing you know, it's going to dump. So, you know, if you thought I've been crazy for keeping us short this market, it's been a brilliant idea. And I've got a mind. I spot these repetitive patterns like crazy, and I show them to you constantly. So I didn't make it up, and we did fantastically well trading that very same pattern. And look at this one more time, by the way. Another bear flag that we traded right here. And you'll see you had the one-day blow through, and then everything calmed right back down, as it always does, and the market went right back down. So that seems to be the pattern. That happens to be the pattern we're in right now. And I am a creature of repetitive patterns. So this is probably today, right here. The likelihood is the Fed will speak, gold comes back down, and the end result will be like this for the next couple of days. However, risk management to me is more important than proving that I might have been right. That's a ridiculous thing to do. So we stopped ourselves out like we were supposed to do once I seen it get near this stuff. Once we're up here, maybe it's no longer a flag. We needed to be stopped out, and we did that. So just trading my plan, trading the repetitive patterns. You want to know the last time I got us long gold? I'll show you right here. The last time we bought gold, I did the exact same thing opposite. I found the bull flag and said, well, might as well play the long side for a little while, and that's what we did. I am simply playing gold the way it's showing me it wants to be played. It's got flags everywhere. They've been working really well, and if you turn into a gold bug because of a one-day rally through this flag, you're a crazy person. You need to stick with the program right now. It is nothing more than a repetitive pattern. Maybe today's trade didn't work. That does not mean this repetitive pattern will not pan out. So until it doesn't pan out, and this gets above this red line and takes off and gets above the 200 bar moving average, you have nothing more than this pattern turning into this pattern, getting smaller into this pattern, then having a big drop. The pattern opens up again, but it's the same pattern. Keep yourselves in check on gold. It is not going through the roof. And we go back to NASDAQ. The NASDAQ right now, being that it is one of our leaders, is starting to try to plow its way through the 200. We don't know what the Fed's going to do as far as speech. We know they're not raising rates. We don't know what their speak will be. The speak may certainly pump this thing up, but I see a big bear flag underneath a 200 bar moving average. Now, there is this one quagmire, and I'm sure you'll appreciate me confusing you with this next bit of analysis. Is it actually a bull flag right here? Well, let's just make this slightly more confusing. Did we actually just break out of a bull flag right here, a little one? Is that what happened? From the bottom, and it's starting to run higher? All right, wait, maybe that's not it. Just want to show you just how confusing this pattern is right now. Not an easy thing to figure out. Luckily, the Fed will straighten us out tomorrow. Or is it a bull F flag that looks like this, with the flagpole being this, and this being the flag? Is this what we're dealing with right now? You know what? I wouldn't be able to tell you exactly until after we make our move. As far as I'm concerned, the flag that sticks out the most is the big bear flag, the one that is under the 200 bar moving average. I know it's a bull market, so I shouldn't even be touting the bear flag, but it is what it is, and I am not going to change it on us. So the likelihood is that the bear flag is a bear flag. We're going to find out very shortly. Until it proves it's not, I'm slightly worried about this 200 bar moving average and the big pattern below it. Traders, come on down to livewithoscar.com and come join me in my free live chat room. This is what I wanted to show you because we did have a losing day. And after a losing day, actually we had two in a row. I know you need to see the analysis to make sure Oscar didn't fall off his perch. I absolutely did not. I am trading my plan. It doesn't, technical analysis will not work 100% of the time. Come on down to livewithoscar.com. Join me there. And remember this. Keep your emotions out of trading. One of the best things you can do to help yourselves with that is, now you can do it with me live, is say this to yourselves every morning, every afternoon, every evening, especially this morning, and you know what that is. Stops are in. Right here, stops are in. Emotions are out. Traders, thank you so much for watching the live performance.